I'm back. Tangled in a web of red tape, let's cut through the confusion and untangle ourselves. Today, in business licensing, regulations, and taxations, we'll learn how to navigate government regulations, minimize your tax liabilities, and keep accurate records. This is the 8th of the 10th weekly training sessions in our business finance series. Now, let's start unwinding this knot.
For our table of contents today, we have understanding government requirements, strategy for minimizing tax liability using deductions, record keeping for tax reporting, and labor and industry. Now, on to understanding government requirements. Let's break down those government requirements for your business in Washington State. This slide outlines some key steps you'll need to take to operate legally. The first bullet point we have is obtain a unified business identifier, or UBI for short, numbers from the DOR, that stands for Department of Revenue, which serves as your business identification number for state tax purposes. Think of the UBI as your business social security number with the state of Washington. It's a unique 9-digit number assigned by the DOR. You'll need this number for a variety of state level interactions, most notably when dealing with state taxes. These include things like paying sale tax if your business sells goods or service subjects to it, paying other states' business taxes if applicable, or registering your business with various state agencies. Getting a UBI is usually one of the first official steps you'll take when starting a business in Washington. You can typically register for one online through the DOR website. The second bullet point we have is determine specific license and permits required for your business based on its nature, location, and activities. This point emphasizes that beyond the general UBI, your business will likely need specific license and permits to operate legally. The exact requirements depends heavily on several factors. One is nature of your business, that's what kind of good or services do you provide. For example, a restaurant will need health permits, a construction company might need a contractor license, and a business selling alcohol will need a liquor license. Another thing you need to think of is location of your business. That's both the state and your local cities or counties will have their own licensing and permits requirements. For instance, operating a business from your home might require a home occupation permit from your city. And last would be activities of your business. That certain activities might trigger specific permits. For example, handling hazardous materials or operating specific types of equipment could require additional permissions. The provide link directs you to the Washington State Business Licensing Service website. This is a crucial resource where you can research the specific license and permits your business needs at both the state and local levels, and often applies and manage many of those licenses through a central portal, simplifying the process. It's essential to thoroughly investigate your license and permits relevant to your specific situations to avoid potential fines or legal issues. On to the third bullet point we have is compliance with zoning laws and local regulations is essential to avoid penalties or legal issues. So, zoning laws are rules implemented by cities and counties that dictate how land can be used in different areas. These laws govern things like what type of business can operate in a particular zone, that's like residential, commercial, or industrial. Another part of laws govern things like building setbacks, height restrictions, and parking requirements, and signalage and other aesthetic considerations. Local regulations go beyond zoning and can include a wide range of rules related to things like noise level and waste disposal, public safety, and more. Before you set up shop, it's crucial to check your local city or county government to ensure your business activities comply with all applicable zoning laws and local regulations. Operating in violation of these rules can lead to fines, legal actions, and even being forced to shut down your business. Now, on to the last bullet point we have is regularly check for updates and renew license on time to maintain compliance with regulations. Government regulations are not static, they can change over time. It's your responsibility as a business owner to stay informed about any updates that might affect your operations. This includes changes to state laws, local ordinances, and the requirements for your specific license and permits. Most license and permits have expiration dates and need to be renewed periodically. Failing to renew them on time can result in your business operating illegally, leading to penalties and potential shutdowns. Develop a system for tracking your license and permit expiration dates and regularly checking for any regulatory updates from the relevant state and local agencies. The Washington State Business Licensing Service website can provide reminders and information about renewals. So, in summary, this slide highlights the fundamental steps involved in meeting government requirements for your business in Washington State. It's not a exhaustive list, but it points you in the right direction to obtain your UBI, identify and secure the necessary licenses and permits, comply with local regulations, and maintain ongoing compliance. Remember to utilize the provide link to your business licensing service as a key resources in this process. Okay, let's dive deeper into the specific requirements for business license in Washington State. Building on our previous conversation about general government requirements, the requirements for business license based in Washington State, you need to have your business may require city, county, and state endorsement. This point emphasizes that obtaining the basic state business license, often linked to your UBI, might not be the end of the licensing story. Depending on where your business is physically located and the nature of your operations, you might need additional endorsements or license from different levels of government. The city endorsement, your city might require a specific permit or license to operate within its boundaries. These could be for general business operations or specific to your industry, like a restaurant permit or a retail store license. Cities often have their own zoning regulations and may require a local business license to ensure compliance. The county endorsement, and that's similar to cities, your county might also have its own licensing or permitting requirements. This is particularly relevant if your business operates in unincorporated areas of the county, not within city limits, or if your business activities have county-wide implications. The state endorsement, and that's beyond the general business license, the state of Washington has various endorsements or licenses for specific industries or activities. These are often managed through the Department of Licensing or other state agencies. Examples include license for contractors, cosmetologists, real estate brokers, healthcare professionals, and businesses selling specific regulated products. The Washington State Business License Service website, the one we talked about before, is your primary tool for figuring out which of these endorsements apply to your business. It helps streamline the process of applying for many of these licenses. The next thing of the requirements that you need to have is obtain a trade name if you are doing business using a name other than your licensed business name. When you register your business, you establish its legal name. It might be your own name if you're a sole proprietor or the official name of your LLC or corporation. However, you might want to operate your business under a different, more customer friendly name. This is where a trade name, also sometimes called a doing business as or DBA name, comes in. In Washington State, if you intend to use a trade name that is different from your official register a business name, you generally need to register the trade name with the state. This helps ensure transparency and allow the public to know the underlying legal entity behind the trade name. You typically register your trade name through the Department of Revenues as part of your business licensing process or as an update to your business existing registration. Now, onto another part of the requirement is if you hire employees, register with employment security and labor and industries. And that's if your business grows to the point where you hire employees, you have additional responsibilities related to employment. And those are Employment Security Department or ESD for short. You'll need to register with the ESD for unemployment insurance purposes. This involves setting up an account and paying unemployment taxes for your employees. This system provides benefits to eligible workers who become unemployed. The Department of Labor and Industries, or LNI for short, you'll also need to register with LNI for workers, compensation insurance. This provides coverage for employees who get injured on a job. You'll need to pay premium based on your industry and payroll. LNI also oversees workplace safety regulations and enforces labor laws. So you'll need to be aware of your obligations as an employer regarding wages, hours, and working conditions. Registering with these agencies is crucial for legal compliance and to protect both of your business and your employees. And the last part of the requirements is you sell a product or provide a service that requires the collection of sales tax. In Washington state, sales tax is generally applied to the retail sales of tangible personal properties and certain services. If your business falls into this category, you are responsible for collecting sales tax. That's you need to charge the correct sales tax rate, which includes state and local components, to your customers at the point of sale. The reporting sales tax you might regularly, that's typically monthly, quarterly, or annually, report the amount of sales tax you collected to the Department of Revenue. And for remitting sales tax, you need to pay the collected sales tax to the Department of Revenue accordingly to their established schedule. It's important to understand what type of products and services are subject to sales tax in Washington and to set up your system to accurately collect, report, and remit these taxes. The DOR website has detailed information on sales tax rules and regulations. In essence, this slide highlights some crucial and often trigger additional requirements beyond the basic business license in Washington. It emphasizes the layered nature of business licensing, the importance of transparency with trade names, the specific obligations that comes with hiring employees, and the responsibility of collecting and remitting sales tax if applicable to your business activities. Always refer to the Washington State Business Licensing Service and the website of the Employment Security Department and Labor and Industries for the most up to date and detailed information. All right, let's break down these additional requirements for a business license in Washington State. And the first bullet point we have is your gross income is 12K per year or more. And this point establishes a threshold for when you are generally required to obtain a business license in Washington State. If your business total revenue from all activities within a calendar year reaches or exceeds 12K, you are typically obligated to register your business and obtain the necessary license. Even if your income is below this threshold initially, if you anticipated it reaching 12K or more, it's wise to get your business license proactively. Additionally, there might be other reasons like specific industry regulations or local requirements to get licensed even if your income is below this amount. On to the second bullet point, we have your business is required to pay business occupation taxes to the Department of Revenue. And this means it's a tax on the total revenue of your business without deductions for most business expenses. Registering for a business license allows the DOR to identify your business and ensures you are properly reporting. Paying your business occupation taxes. There are very limited exceptions and deductions available, but generally, if you're operating a business with gross income over the threshold, you'll be paying business occupation taxes. And the last part, your business needs nexus threshold reporting requirements. And this refers to a level of connections or activities within Washington state that triggers this tax liability and associated reporting requirements. For businesses without a physical storefront or office in Washington, Nexus can be established through various activities such as having remote employees located in the state, having affiliates or representatives soliciting business in the state, deriving a certain amount of sales from customers within the state. Washington state has specific economic nexus thresholds based on sales revenues and storing inventory in the state. If your business meets or exceeds these nexus thresholds, you are generally required to register for a business license in the Washington state and may be liable for business occupation tax and sales tax if you sell taxable goods or service to Washington customers, even if you are physically located elsewhere. Understanding Nexus is particularly important for out of state business selling into Washington. You need to determine if your level of connection creates a tax obligation and a need for a Washington state business license. The DOR provides guidance or Nexus rules and thresholds. In essence, this slide outlines key triggers for requiring a Washington state business license related to your business financial activity and connections to the state. Reaching a certain level of gross income, being liable for business occupation tax, and meeting nexus threshold are generally necessitate obtaining a business license to operate legally and comply with Washington state tax laws. It's crucial to understand these requirements to ensure your business is properly registered and paying the necessary taxes. So here we have business registration checklist. This checklist outlines the key entities you'll likely need to register with to operate your business legally in Washington state. This specific for your business will depend on its structure, industry, location, and whether you hire employees. First thing you need to do is to register your EIN with the IRS. EIN stands for Employer Identification Number. The following types of business need a EIN would be corporations, partnerships, limited liability companies, or LLC for short, that will have employees or operate as a corporation for tax purposes, estate and trust, and certain sole proprietorship. And why do you need a EIN? You'll need it for various tax purposes, such as opening a bank account, filing federal tax returns, and hiring employees. And you can apply it on an EIN website through the IRS website. It's a free process. The second part of the checklist, you want to register your business with the state. This step involves registering with various Washington state agencies depending on your business structure and activities. We have its Washington Secretary of State. If you are informing a corporation, either a C Corp or an S Corp, you will need to register your business with the Washington Secretary of State. This involves filing formation documents like articles of incorporation and paying a filing fee. This officially creates your corporate entity in the state. While not explicitly mentioned here, if you are informed a LLC, you also register with the Washington Secretary of State by filing articles of organization. Sole proprietorship and general partnership typically don't register with the Secretary of State unless they are using a trade name, which they will register with the Department of Revenue. The Washington State Department of Revenue, all businesses operate in Washington State that meets the income threshold, like I said, 12K per year, or are required to pay business occupation tax generally needed to register with the Department of Revenue. This registration gets you your Unified Business Identifier, or UBI for short, number, which, as we discussed, is your main state tax identification number. Through DOR, you will also register for and manage your business occupation tax obligation, register to collect and remit sales tax if you sell taxable goods or service, and potentially register your trade name if you use one different from your legal business name. Onto the professional practice license. If your business involves a professionalism that requires a specific license to practice in Washington State, you'll need to obtain this license from the Washington State Department of Licensing, or DOL for short. And this applies to a wide range of professionalism, including healthcare professionals, and that's like doctors, nurses, dentists, etc., cosmetologists, accountants, engineers, real estate brokers, and many others. You'll need to meet the specific qualifications and applications requirements for your professionalism. Now, on to the if you have employees. As we discussed it earlier, if you hire employees, you'll need to register with those two state agencies, and that's Washington State Department of Labor and Industries, or LNI for short, for workers' compensation, insurance, and workplace safety regulations, and Washington State Employment Security Department, or ESD for short, for unemployment insurance taxes. Now, on to the last business regulation registration checklist. You need to register your business license with the city your business is located in, and that's City Business Licensing Office. Many cities in Washington State require business operating with their limits to obtain a city business license. This is in addition to any state level license and helps the city manage and regulate businesses within its jurisdiction. The requirements and fees for city business license vary significantly from city to city. You'll need to contact the business licensing office for the Pacific City where your business is physically located. As for certain business, the local health department. For businesses that handle food, provide certain personal service like tattooing or massage, or operates in areas that could impact public health, often need to obtain permits or license from the local city or county health department. And this ensures compliance with health and safety regulations, example including restaurants, food trucks, daycare facilities, and businesses dealing with waste disposal. In summary, this checklist highlights the multi-layered approach to business registrations in Washington State. You likely need to interact with federal or IRS, various state Secretary of State, DOR, Department of Licensing, Labor and Industries, Employment Security Department, and local city license office, local healthcare departments, entities depending on the specific of your business. For the federal and state tax rates, we have federal payroll taxes paid by the employer. Usually, the FUTA would be 6% up to $7,000 wages per employee. The FICA would be 7.65% on employees' wages, and this is in addition to the employees, that's 7.65%. For the state payroll taxes, and some of which can be employee paid, the ESD would be 1.35%, and that's an average rate up to $68,500 of wages per employee, and as a range is 0.27% to 6.02%. The LNI would be $1.53 per hour worked, and this is a wide range of less than 50 cents to over $5 an hour. In Washington care, it would be 0.058% of wages. After Washington leave, it will be 0.052% of wages. So for this slide, we have federal and state tax rates. The state B&O tax rates, we have retail revenues, it will be 0.471%. The manufacturing revenues, it will be 0.484%. We have service revenues, it will be 1.5%. So the property tax rate, this is based in Tacoma. We have business, reals, and personal property, it will be 1.1111%. The sales tax rate, this is also based in Tacoma. For taxable sales, it will be 10.3%. The federal corporate tax rate, it will be 21%. And for federal Schedule C tax rate, that it will be either 10% to 37%, same as your individual tax bracket. Let's get on to strategies for minimizing tax liability using deductions. Okay, let's dive into these strategies for potentially minimizing your tax burden, specifically in Washington State. It's important to note that tax laws are complex and subject to change, so consulting with a tax professional is always recommended for advice tailored to your specific situations. For strategies to minimize tax, you want to take advantage of deductions specific to Washington State, such as business and occupations, or B&O for short, tax credits for small businesses or those engaged in R&D. So Washington State offers certain B&O tax credits designed to ease the tax burden on small businesses. These credits often have specific eligibility requirements based on factors like annual gross revenues. For example, there might be a small business B&O tax credit that allows businesses below a certain income threshold to reduce or even eliminate their B&O tax liability. The exact details of these credits, like income limits, credit amounts, application process, can change. So it's crucial to check the current regulations on the Washington State Department of Revenue's website. To encourage innovation, Washington State may offer B&O tax credits for businesses engaged in qualified research and development activities within the state. These credits are typically designed to offset a portion of the expenses incurred in these R&D efforts. The definition or qualifier R&D, the credit calculations, and any limitations will be specific in state law. Businesses involved in technological development or scientific research should investigate these potential credits. To claim these credits, you typically need to file the appropriate tax forms with your B&O tax return. This might involve providing documentations to support your eligibility, such as proof of small business status or details of your R&D activities and expenditures. Now, for the sales tax exemption for certain industries like manufacturing, agriculture, and nonprofits, Washington State has specific exemptions for sales tax for certain industries and types of purchases. This means that businesses in these sectors might be able to purchase certain goods or service without paying sales tax, or they might not be required to collect sales tax on some of their sales. Manufacturers may exempt from paying sales tax on machinery, equipment, and supplies used directly in the manufacturing process. This is intended to reduce the cost of production and encourage manufacturing within the state. There are often specific definitions of what qualifies as directly used in manufacturing. The agricultural industry often benefits from sales tax exceptions on items like farm machinery, fertilizers, seeds, and other input essentials for agriculture production. This aims to support the farming community and the state agricultural sector. Certain qualifying nonprofit organizations may be exempt from paying sales tax on purchases made in their exempt purposes. Additionally, some sales made by nonprofits to fund their activities might be also be exempt. There are specific rules and application processes for nonprofits to obtain and maintain their tax exempt status. Besides these, there might be other industry specific or other item specific sales tax exceptions in Washington state. For example, there could be exemptions for certain healthcare related purchases or for goods sold to out of state buyers. To claim a sales tax exemptions, where making a purchases, you'll usually need to provide a seller with an exemption certificate. If you believe your sales are exempt, you'll need to understand the specific rules and potentially obtain documentation from the DOR or your buyer to support the exemption. Now, to continue on, you want to consider forming a limit liability company for potential tax benefits, including pass through taxations and liability protection. One of the primary potential tax benefits of an LLC is a default pass through taxation. This means that the profits and losses of the businesses are not taxed at the LLC's level itself. Instead, they are passed through directly to the owners or call members and reported on their individual income tax returns. The owners then pay income tax and self employment taxes, if applicable, on their share of the profits. This differs from the traditional C corporation, which is subject to double taxation. The corporation pays corporate income tax on its profits, and then shareholders pay individual income tax on dividends they receive from the corporation. While S corporation also have pass-through taxations, the rules and requirements are different from those of an LLC. While the default tax treatment of for an LLC is passed through, LLC members also have elect to their LLC tax as either a C corporation or an S corporation. This flexibility can be advantageous to certain tax situations. For example, selected S corp status might allow owners who actively participate in the business to treat some of their earnings as salaries, subject to like payroll taxes, and the remaining as dividend, potentially avoiding self-employment taxes. However, this election comes with stricter requirements and increased complexity. While not directly a tax benefit, the limited liability aspect of an LLC can have indirect financial benefits. It generally protects the personal assets of the owners from business debts and lawsuits. This separation of personal and business liability can prevent significant financial losses that could indirectly impact your overall financials and tax situations. Important note, the actual tax benefits of forming an LLC depends heavily on your specific business circumstances, income levels, and long-term financial goals. It's crucial to carefully consider these factors and discuss them with a tax professional to determine if an LLC structure and its chosen tax classification are the most advantageous for you. Now, you want to consult with tax professionals to explore available deductions, credits, and strategies tailored to your business. Tax laws, both federal and state, are complex and constantly evolving. What might be valid deductions or credit today could change tomorrow. A qualified tax professionals, like such as certified public accountant or CPA for short, enrolled agent, or a tax attorney, has the expertise and up-to-date knowledge to help you navigate these complexities. A tax professional will take the time to understand the specifics of your business, including its industry, structures, income, expenses, and long term goals. Based on this understanding, they can identify deductions, credits, and tax planning strategies that are specifically applicable to your situation. Tax professionals can help you identify all the legitimate business expenses you can deduct to reduce your taxable income. This includes common deductions like rent, utilities, salaries, supplies, and depreciation, as well as potentially less obvious deductions specific in your industry. As we discussed in the previous point, Washington state and the federal government offers various tax credits that can directly reduce your tax liability. A tax professional can help you determine which credit your business is eligible for and guide you through the process of claiming them. Beyond just deductions and credits, a tax professional can help you develop a proactive tax plan. This might involve strategies related to the timing of income and expenses, retirement plan contributions, asset management, and the overall structures of your business to minimize your tax burden over the long term. Perhaps most importantly, a tax professional can help you stay compliant with all federal and state tax laws and regulation, reducing the risk of audits, penalties, and interest charges. It's generally a good idea to consult with a tax professional early in the life of your business and to maintain an ongoing relationship with them. They can provide invaluable guidance as your business grows and your tax situations become more complex. So, my advice for tax pitfall to avoid, you want to keep your personal and business tax separate. You don't want to get audited and lose your personal property or having to pay a hefty penalty. Within that, so let's do like a few scenarios. For example, Bob bought a house and paid property taxes as a business expenses. He claimed on his file that he need to have the house to work, therefore it is essential for business. Now, What do you think Bob did wrong in this scenario? And here you could pause it and think what he did wrong and talk to yourself or your other friend or acquaintances to figure out this scenario. After you pause it, I'll tell you the answers. So, in this scenario, what Bob did wrong is by claiming his personal property taxes on his house as a business expense simply because he claimed he needs the house to work. Here's the breakdown of why it is likely incorrect and tax pitfall to avoid. Personal versus business expenses. Tax regulations generally requires a clear distinction between personal expenses and legitimate business expenses. Only expenses that are ordinary and necessary for carrying on your trade or business are deductible. Personal residence is typically not a business expense. Owning or residing in a home is fundamentally a personal activity, while there are specific situations where a proportion of your home expense might be deductible, like home office deduction. Simply stating that you need your house to work doesn't automatically convert personal housing costs into business expenses. To claim a home office deduction, you typically need to meet specific criteria set by tax authorities like the IRS at the federal level. These rules usually require that the portion of your home you're claiming is exclusively used for business. This means that specific areas of your home is only used for your trade or business and nothing else. Regularly used as your principal place of business, a place to meet with clients or customers, or a separate structure not attached to your dwelling but used in connection with your business. Property tax paid on your primary personal residence are generally deductible as an itemized deduction on your personal income tax return, not as a business expense. Bob's reasoning he claimed on his file that he needs to have a house to work, therefore it is essential for business, is too broad, but doesn't align with the specific requirements of deducting home-related expenses as business expenses. Simply needing a place to live so you can work doesn't make your entire house and its associated house cost a business expense. In essence, Bob is trying to deduct a personal expense, property tax on his home, as a business expense without meeting the specific criteria that would allow for such a deduction, like qualified home office. This is common tax pitfall that could lead to scrutiny, penalties, and having the deduction disallowed during an audit. Let's go to a second scenario. Let's say Elaine keep going out for lunch and claimed it as a company expense, even if she can't prove that the lunch was provided for a client and not for personal use. So what did Elaine did wrong in this scenario? And you could pause right there, and after you pause it, we'll go on to the answers. In this scenario, Elaine did wrong by claiming the cost of her lunches as a company expense without being able to prove that the lunches were business related and not for her personal use. Here's why this is a tax pitfall, which is for an expense to be deductible as a business expense, it must be ordinary and necessary for carrying on your trade or business. This means the expense should be directly related to your business activities. Generally, the cost of individual meals is considered a personal expense and is not deductible. There are specific circumstances under which the cost of meals can be deducted as a business expense. These typically involve the meal must be directly related to the active conduct of your business. This usually means you are having a business meeting or discussion during the meal with the client, potential client, business partner, or other business associate. You need to be able to prove the business purpose of the meal. This often involves keeping records that includes the date and the place of the meal, the business relationship of the people involved, a substantial business discussion that took place during or directly before or after the meal, and the amount of the expense. The key issue is that Elaine, quote unquote, can't prove that the lunch was provided for a client and not for personal use. This lack of substantiation means she cannot demonstrate that the expense was generally for a business purpose. If Elaine was simply eating lunch with her own substantiation, even if she discusses some work related matters, it is still simply primarily considered a personal expense and therefore not deductible as a business expense. In essence, Elaine is attempting to deduct what appears to be a personal consumption as a business expense without meeting the necessary criteria to prove a legitimate business purpose. This is a common area of tax audits, and without proper documentation showing the business nature of the meals, the discussion is likely to be disallowed. Now, let's get on to record keeping for tax reporting. So, here are my tips to record keeping for tax reporting, which is one, maintain accurate records of income, expenses, and deductions to support tax filing. You want to have a system to keep personal and business items separated. You want to have regularly audit and update your files. And you want to keep a backlog of 3+ years hard copy of your files. So on this slide, we have the income tax. And it says all businesses except partnership must file an income tax returns. Partnership files an information return. The form you use depends on how your business is organized. Refer to business structure to find out which returns you must file based on your business entity established, and we will talk about that in the next slide. The federal income tax is a pay as you go tax. You must pay the tax as you earn or receive income during the year. An employee usually has income tax withheld from his or her pay. If you do not pay your tax through withholding or do not pay enough tax that way, you might have to pay estimated tax. If you are not required to make estimated tax payments, you must pay any tax due when you file your return. Now, here's a slide about the business structure. For your business, if you are a sole proprietorship and single owner LLC, your required form to fill out will be 1040 Schedule C, 1040 SE, that's self-employed tax, or the 1040 ES, estimated tax. And usually you have to file by April 15th as part of the owner's personal tax return. Estimated tax is due April 15th, June 15th, September 15th, and January 15th. The ownership and multiple owners LLC, your required form you need to have is Form 1065 plus 1065K1 form for each owner. And the 1040 SE, that's self-employment tax, and a 1040 ES, that's estimated tax. After the due date, businesses usually the calendar year must file by April 15th. Businesses using a fiscal year must file by the 15th of the fourth month after the end of fiscal year. Estimated tax is due April 15th, June 15th, September 15th, and January 15th. As for standard corporations or LLC that have formally elected to file as standard corporations, your required form would have Form 1120 plus withhold from owner's paycheck for income taxes, Social Security, and Medicare. As for the due dates, businesses using a calendar year must file by March 15th. Businesses using a fiscal year must file by the 15th of the third month after the end of a fiscal year. If your business is an S corporation or LLC that have formally elected to file as S corporations, your required form you need to have is Form 1120S and 1120K1 form for each owner, plus withholding from each owner's paycheck for income taxes, Social Security, and Medicare. For the due date, businesses using a calendar year must file by March 15th. Businesses using a fiscal year must file by the 15th of the third month after the end of the fiscal year. Here, let's break down this information about federal taxes and associated forms. The Form 720, that's the federal excise taxes reported on Form 720, consists of several broad categories of taxes, including the following: environmental taxes, and these are taxes levied on certain substances or activities that may have a negative impact on the environment. Examples can include taxes on ozone depleting chemicals, imported petroleums, products, and certain hazardous waste. The communication and transportation taxes, these categories include taxes related to communication service, like telephone and internet service, and the transportations of people and property by air. This might involve taxes on airline tickets and air cargo. The fuel taxes, these are excise taxes imposed on various types of fuel, such as gasoline, diesel fuel, and aviation fuel. These are taxes are often used to fund transportation related projects. Tax on the first retail sales of heavy trucks, trailers, and tractors. This is a one-time excise tax imposed on the initial sales of certain heavy-duty vehicles. The purpose is often related to highway maintenance and infrastructure fundings due to the impact of these vehicles. The manufacturer taxes on the sale or use of a variety of different articles, and this is a broad category covering excise taxes on various manufactured goods. The specific articles subject to this tax can change, but have historically included items like firearms, tobacco products, and certain sporting goods. In essence, Form 720 is a comprehensive form used to report and pay a wide range of federal excise taxes that fall into these general categories. If your business engaged in activities subject to any of these taxes, you will likely need to file Form 720 periodically, typically quarterly. Form 2290, there is a federal excise tax on certain trucks, tractors, and buses used on public highways. The tax applies to vehicles having a taxable gross weight of 55,000 pounds or more. Report the tax on Form 2290 for the Form 730 if you are the business or accepting wagers or conducting a wager pool or a lottery. You may be liable for the federal excise tax on wagering. So the people who must file this applies to individuals or entities that operate bookmaking businesses, lotteries other than state conducted lotteries in some cases, and wagering pools. The Form 11C is used for occupational tax and registration return for wagering to register any wagering activities and to pay the federal occupational tax on wagering. The registration requirements, the Form 11C serves two main purposes, which is it's used to register the wagering activity with the federal government, and it is used to pay the annual federal occupational tax associated with being in the business of accepting wagers. So generally for the estimate tax, you must pay the tax on income, including self-employment tax, by making regular payments of estimated tax during the year. If you are employment, then you must file a self-employment tax, or SE for short, and is a Social Security and Medicare tax primarily for individuals who work for themselves. Your payment for SE tax contributes to your coverage under the Social Security system. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance or Medicare benefits. Generally, you must pay SE tax and file Schedule SE, that's Form 1040 or 1040 SR. If either of the following applies, if your net earning from self employment were $400 or more, if you work for a church or qualified church controlled organizations other than as a minister or a member of a religious order that elected an exception from Social Security and Medicare taxes. You are subject to SE tax if you received 108 and $28 or more in wages from the church or organization. Now, on to the employment taxes. When you have employees, you as an employer have certain employment tax responsibilities that you must pay and form your must file. Employment taxes include the following: Social Security and Medicare taxes, federal income taxes withholdings, and federal unemployment, or FUTA for short, tax. So, most importantly, there's a common mistakes on taxes for small business. We have our bookkeeper who helps us with the taxes. And we have some great advice from our bookkeeper about some common mistakes. For the bookkeeper's part, you want to be aware of what your bookkeeper can and cannot do and provide for your company. Most of most of us need to have access to your accounts, so you need to make sure that there are no reports of misconduct against them. You want to make sure all the license and permits are in place, as in Secretary of State, UBI, Employer Identification Number, and business license. And also, you want to make sure the bookkeeper is in line with state and federal law. To continue on with the bookkeeper's common mistakes, you want to make sure that the bookkeeper is working with your certified public accountant, or CPA for short, and you set up your chart of accounts. And this is the backbone of your company, so be respectful of suggestions that both should suggest. You want to make sure the bookkeeper has access to you. Many questions comes up and need answers, and if you are not available, it makes working with you difficult. General mistakes that companies make when starting a business: tax responsibilities, state and internal revenue service. On to the part of Department of Revenue, you want to make sure the filings are done and paid either quarterly or monthly, depending how you set up to start with the Department of Revenue. For the bidding, you want to make sure that you are bidding that you do a good job in evaluating your cost of goods provided for this job and payroll. Many jobs are underbid, and after the job is done, you are at a loss. Each job should be bid with payroll per hour and the cost of the products you need. The common mistakes on the payroll: you want to make sure all employees' documentation is on file and employee folder is created. You want to make sure you have all the employment security and labor and industry rates in place on the payroll. You want to make sure Internal Revenue Service 941 is paid monthly and is usually due on the 15th of the following month. And you want to make sure all labors and industries and employment security reports are filed quarterly. Now, on to labor and industry. This slide explains how the Washington State Department of Labor and Industries calculates an employee's workers' compensation premium rate. It emphasizes that the rate is tied to the business risk classification. Here's the breakdown. The employee premium rate: your employee's benefits or insurance rates falls under class risk specification. This means that the cost of workers' compensation insurance for your employees is determined by the specific risk classification assigned to the type of work they perform. L9 categorize different jobs and industry based on the potential for workplace injuries. Higher risk jobs will have higher premium rates. Each employee within your business will likely fall under one or more of these risk classifications, and their premium will be based on that classification. Here's how L9 calculates the premium rates for each of the business risk classification, and that's multiplying the business expense factors by the sum of the 8 accident funds, medical aid funds, and stay at work base rates, and then adding the base rates for the supplemental pension fund. The multiply business expense factor is a multiplier that reflects your company past history for workers' compensation claims. If your business had few or no claims, your experience factor will likely be lower than 1, resulting in a lower premium rate. If your business has had a higher number of costs of claims, your experience factor will likely be higher than 1, leading to a higher premium rate. New businesses typically start with a base experience factor, which will then be adjusted over time based on their claim experience. The accident funds base rate: this is the base rate that covers the costs associated with compensating workers for job related injuries, including lost wages and permanent impairments. This rate is specific to each risk classification. The medical aid fund base rate: this is a base rate that covers the cost of medical treatments for the workers who are injured on a job, and this rate also varies by the risk classification. Stay at work base rate: this component is related to the program and incentives that encourage employers to help injured workers return to work as soon as safely possible. This rate can be also varied by risk classification. The supplemental pension fund base rate, and that's the additional base rate that funds supplement pensions for workers who have experienced severe and long lasting disabilities due to workplace injuries. This rate is also specific to each risk classification. So, given this overall, in simpler terms, if you want it easier, the cost of the workers' compensation for your employees is based on one, the type of work they do, and as high risk jobs cost more to insure. Two, your company's safety record, experience factor. A better safety record can lead to lower premiums. Third, you want to have various funds that cover different aspects of workers' compensation, and that's base rate. These include cost of injuries, medical care, return to work programs, and long term disability pensions. The key takeaway: employers can influence their workers' compensation costs by focusing on workplace safety to reduce claims, which in turn can improve their experience factor over time. Understanding these class classification of your employees' roles is such crucial for budgeting and managing these insurance expenses. So here we have a screenshot. This is based in 2025 for Washington State Department of Labor Industries. We have like the image of the links for the rates for workers' compensation, and you click on this, by the way, on their website. This will tell you all the information of the rates for workers' compensations, the hourly rates, and experience rating. A lot of times, business owners more than often hire a contractor. If you are hiring a contractor, your contractor must meet L&I standard to be considered one. You want to ask yourself, are they registered with L&I? Are they a certified professional, or they are working in a specialized field? Are they very viable through L&I contractors lookup page, or do they have a very viable business? Here at the slide, we have some common L&I rules for you to keep in mind. The first one we have is business licensing. That's to obtain a state business license and any necessary local license. Second, you have labor laws that comply with minimum wage, overtime, and break regulations. Third, you have workers' compensation that's provide coverage for employees' work-related injuries. Four, tax obligations that's understand and fulfill state and federal tax requirements. And last would be health and safety that's adhere to workplace safety regulations to ensure employees' well-being. In addition to state business and occupation taxes and sales taxes, Washington state and some local governments also impose what is called excise taxes, which are additional fees to be collected from sales of specific items or transactions. To give an example, the State Department of Revenue collects an excise tax of $1 per gallon of syrup used to make carbonated drinks for customers. If your wholesaler did not pay this $1 per gallon excise tax, the retailer is liable to pay the tax directly to the state. Let's give it another example. If your business sells property, it is subject to real estate excise tax, which ranges from 1.1% to 3% depending on the total selling price of the property. And if your business purchased real estate, be sure the sellers pay this excise tax, or you may be liable if the tax is not paid by the selling party. Note, local governments can also impose and collect excise taxes. For instance, the city of Tacoma recently imposed a 6% excise tax on solid waste, that's garbage collection. Otherwise, the city of Seattle has a sweetened beverage excise tax from 1 cent to 2 cents per ounce that is usually collected at the wholesale level and calculated into the price a retailer pays. I know it is sometimes complicated, but becoming aware of what is taxed and at what tax rate is now standard when operating a business. Now let's talk about tariffs, which is a federal tax on imported goods directly paid by the entity shipping the products into the United States, but usually passed on to the U.S. customer in the form of higher prices. Here's an example. Suppose you have a standing order for goods produced offshore that typically costs $1,000. That includes an existing 10% tariffs that is factored into the $1,000 shipment. Now, if the tariffs increase to 50%, that imposes an extra $400 cost to the foreign exporter, who is likely to pass on the extra tariff fee to the price they charged your business for the order. So, instead of a $1,000 cost, you will be paying $1,400. And if this is usually a monthly order by a business, that amounts to another $4,800 per year. Here are some things you can do to protect your business from unanticipated tariffs and adjust your practice to impose tariffs. 1. Keep updated on the source of your vendor supplies and require advance notice of price increases on outstanding purchase orders. 2. You want to factor into your prices that increased costs due to tariffs. And third, you want to insert into contract legal language of that your product's prices may increase based upon tariffs. You want to consult your business attorney about this protection, such as stipulating that if tariffs exceeds a certain rate, say by 10% or more, that you have the right to increase products' prices. It is likely that tariff policies will continue to fluctuate indefinitely as countries around the world adjust to competing tariffs imposed by other nations. It is likely that more reshoring of productions will shift from larger tariff countries to smaller tariff countries. For instance, if you have products importing from China, some of those same products may increasingly be produced and distributed from another lower tariff country. So keep on top of tariff costs that rise prices in China, but may be less expensive from Mexico or Japan or elsewhere. I realize that most of the recent past, smaller firms do not have to be concerned with tariff practices. But it is a new world now, with tariffs on the agenda of national governments, whether they want more fundings from tariffs for national budgets or they are using tariffs to punish other countries, at least for the next few years, and possibly longer. Any company buying supplies, equipment, products, or other items outside of the country will need to be educated about tariffs and be adept at responding to changes in tariff policies.
That's it for this training session. Thank you for watching and please subscribe to us here at William Factory for more videos on how to launch and grow your business. Also, you can find us on LinkedIn, Facebook, and Instagram. Start deranging red tape and cutting through the confusion today. This series is made possible with the grant from the Washington State Microenterprise Association. Thank you.